Hi traders, Mark here at the OR Trader. This week I wanted to talk about moving average lines. And here at the OR Trader we have a set of moving average lines that we use to help us determine the trend of the market. And these moving average lines, we have one fast, one slow, and one medium. And we've color coded them, like a stoplight, green, yellow, red. And these are pivot-based moving average lines, which means that we don't use the close to determine the moving average. We actually use the pivot formula using the high, low, and close to calculate these numbers. And they're exponential moving average lines also. But your goal as a trader is to use these pivot moving average lines to determine the prevailing market sentiment, or to detect when that has shifted, before a major move happens. One way of looking at the slope of these moving average lines is kind of like a consensus or an opinion about the direction of the market. When they're all sloped in one direction, either up or down, then the market has a clear trend. When they start to flatten out or shift, suddenly in the opposite direction, then of course the sentiment has changed. I like to call it stacked and sloped. When the moving average lines are stacked in their proper order, and you can see from this chart that I'm showing that the moving average lines, the red one is on top, which is the slow, the medium moving average line is the yellow in the middle, and then the fast is on the bottom, which is the green. Now, when they're in that order and they're not crossing each other or touching each other, that's stacked, okay? And then you want to see sloped. You want to see sloped at a 45-degree angle, and you can look at this chart and see that they are angled at a 45-degree angle, and that's letting you know that a nice trend is happening. So what I wanted to show you is how you can just use these moving average lines to trade the market. And I want to show you some parameters of how to do that. So let's go over this. This is Friday, June 1st, and we had a big news event come out, and you can see in the pre-market that price had this big red bar, and look at our moving average lines. They're stacked and they're sloped to the downside. So as price starts to bounce back up, we would call this a flagging action. Okay, it's a bear flag, and if you guys have followed me in the past, you know that I call this pivot up here the key pivot, okay, because that pivot is the last pivot high before the new low. And as long as that pivot isn't traded above, then you can count on the current trend to stay down. So as price opens, you can tell this dotted line right here is the last bar of the pre-market, and this very next bar, this big green bar, that's the first 5-minute bar of the day. Okay, so the market opens and it pushes up, and it pushes right up to the slow moving average line, okay, to the red line. Now, what I'm going to show you is, how you can trade against these moving average lines. Well, let's say that we know we're in a downtrend. Our moving average lines are stacked and sloped to the downside. So when we approach this slow moving average line, you could establish a short here, right on the line. And you've got to ask yourself, okay, if I'm going to go short here, where's my stop? Well, your stop would be this key pivot back here, okay? It's the last pivot high before the new low. So let's draw a line in here. Okay, so your stop would be up here, 12.95 1/4. Okay, so of course at this point, those moving average lines, that would have been 12.93, 12.92.05, excuse me. So your stop is roughly about a 3-point stop here, okay? So if you establish a short here, your stop, of course, would go here. And of course, you can see that the market pivoted and rotated down, and this trade would have been a nice trade. Now, where do you put your target? Well, of course, that's going to be up to you, but one good place to put it is maybe at the fast moving average line, okay? So maybe you can scale out here and hold some, and then price pivoted again and came back up, okay? Came back up to the red line. It offered you another opportunity to get short here, okay? So you could have gotten short at the red line again. Now where does your stop go? Your stop would go at the last pivot high, right? So your stop would go here. This time, you know, it's a lot less risk of a trade because the distance isn't as great. Of course, this one works out good. It rolls over, comes down really far. And then again, you see another opportunity where it flags back up to the slow moving average line here, touches the slow moving average line. And if you establish a short here, where does your stop go? Okay, your stop would go here. Okay, last pivot high. And of course, this one has, you know, quite a bit of distance here. So this trade would be risky, and it makes sense. This is in the middle of the day. Okay, if you look down here at the time of day, it's around lunchtime. So of course, this is going to be a riskier time to start a trade in the middle of the day. But if you wanted to take a stab at a short here, your stop would have to go up here. Okay. Now you can tell that this one worked also, and it rolled over and it came on down here. Well, then it bounces back up here and it can't quite make it to the red line. This tells you that the market is definitely weakening. The bounces aren't as strong. They can't quite bounce up to the slow moving average line again. And of course, it rolls back over and closes on the low of the day. So this was a nice trend day, and this is just one way to catch this trend day, you know, by using these moving average lines. And of course, it'll work on the upward side also. And one thing I'll say about the upward side, if these moving average lines were stacked to the upside, the green would be on top and the red would be on the bottom. Okay, and normally one thing you're going to see with an uptrend is they won't usually pull back to the red line in an uptrend. They'll only pull back to the yellow line, to the middle line. Okay, and then so in an uptrend, it's a little bit less of a pullback, whereas in a downtrend, you're more likely to hit the red line than on the uptrend. So hopefully this helps. And like I said, if you'd like to learn more about our moving average line indicator, you can check out our website at www.theortrader.com, and hopefully this has helped. All right, guys, see you later.